Okay, but if you untick that, okay, then what happens is that 100, what happens is the, and you've only got 50 in stock, the, when you do the pick note, it only has 50 on. And when you have the invoice, it'll go 100 on ordered, 50 shipped now, 50 on back order. Yeah. It really depends on how you want to work, because some people have a lot of stock coming in. Yeah, they have a lot of orders going out, and sometimes they may not even book the stock in, yeah, before they've actually started to ship them out. So it really depends. If you've got accurate stock control, then you turn that off. Yeah, but if you haven't got accurate stock control, then you might want to ignore stock levels. Okay. So what we try to do is cater for all the different types of people that, and the way they can actually run stock. Okay. So here's our order. Okay. So we can move this order on. So I can print the pick note here. I can print it in a batch. I can convert to a sales invoice here and now, as long as the status was set to that. It won't let me do it now because my status is print pick note. Yeah, it'll only move it on when I actually print the pick note, or I can manually override it if I've got access to do that. Okay. So save and close. Okay, so we've done an order. Okay, now let's say we've printed off our pick notes. They come back. They confirm that they've been picked. Okay, we're going to create a new invoice. This in standard is essentially our simple confirm with pick and pack them. Yeah, and now we want to invoice them. So there's our sales order. Okay, we tick it. We say okay. It'll bring up the actual document. Obviously, if you're running a batch, you could tick multiple ones, and you get the choice then to actually view them or not. Yeah, because obviously, if you're doing, let's say, 30 invoice, confirming 30 orders have been picked and gone, you just tick all 30, say OK, not view them, and then just go into batch print and print them all off in one go. Okay, but obviously I'm doing it individually, so I'm saying this one's gone, and it automatically brings it up. So here's our order. And basically I can print the invoice here and now, or I can again print them in a batch here. It's up to me how I want to work. And save and close. That will actually post the invoice. You can see quantity 1, ship 1, back order none. And if I was, if let's say I was out in the warehouse, there was 10 on the pick note, but I only picked 9, I couldn't find the other one. You know, the 10 would be there, and you put 9 in ship and 1 on back order, or you just ignore the back order. It's up to you. Okay. So that'll save that invoice. It's been posted. Okay, returns are exactly the same as obviously doing an order and invoice, but you can do returns based on posted invoices if you wanted to, or just based on active customers. It's up to you. So if you wanted to kind of say, well, have they actually bought any of these off me before, or I've done that invoice wrong, or they want to return all those goods, then you can just pick a particular invoice, like that one we just did, for example, yeah, and actually decide how many you want to return of each one. So it tells you that you've shipped one of each, yeah. So you say, well, they want to return that one, yeah. So essentially, we've created a return. I can print off the return note to send to them, and they can return the goods with that return note. And then obviously when you actually do the credit note, you can do it from open RMAs, returns, or you can just do it from posted invoices, or you can just do it from active customers. It's up to you. Okay, customer receipts. This is obviously you're getting money from the actual customer. If I pick on my French customer there that I've just looked at, I can type an amount of money in. Let's say, I don't know, 10 euros. This is a French customer in euros. What was the exchange rate? I can say, was there a check number or a wire transfer or whatever? What's the paying in slip? Okay. I'm putting it into my sterling bank account. Okay, so it's saying to me that there's £6.67 going into that sterling bank account, just as a rough exchange rate. If I double click on that, I can actually put some bank charges in here as well. Or I can change the actual amount going in if I knew what it was. Or I can also pick another bank account, which might be, have I got a euro bank account? Yeah, so I was putting it into euros. Yeah, obviously 10 euros being paid, 10 euros going into my euro bank account. So I can save that. I could have allocated here and now if I wanted to, or I can go to the allocation detail and pick up, let's say, credit notes or whatever else I might have. Yeah, other receipts, and then go allocate them against the actual invoices. So I just pick on that invoice there. You can see I put my 10 euros against that, so there's some outstanding on it. If there was settlement discount, okay, I can also apply that. I don't have to kind of apply it at the start of doing the receipt. Okay. One important point about this system as well to do with foreign currency is that loss or gains are only taken when you actually when you allocate a transaction. So, for example, if we had let's say $100 invoice outstanding on a customer account, and then we put a $100 receipt. Okay, let's say the invoice was at $2 to the pound, so that was worth £50 in reality, and when we put the receipt on, it was 1.5, so that was worth 75 pounds. Effectively, we've got a £25 gain there. So that loss or gain is only posted against the debtors control account at that point in time. Okay, a very important point, because a lot of systems don't really cope with multi-currency revaluation or multi-currency loss or gains very, very well. And we were determined to obviously make sure when we developed this system that it did. So obviously I'll come to more about multi-currency revaluation later on when I look at the accounts module, but essentially it's a very important point. Okay, so we've got new, we've been through a lot of new, we've been through find. When you look at find, you can find an order, they're all listed there, open sales orders, sales order history. You can see what kind of status they're at, how much they're worth, what currency they're in. Now in tools, we've got credit control. Okay, so this is designed to help you chase debts and look at your overall age debt better. So we'll look at outstanding balances. This will give me my top 10, my top 20, whatever. So here's obviously my top 10. I can see how much they owe me based on due date. I can see what percentage of the overall total that this particular customer makes up. So I can see that their balance is 1,194. This particular customer is in euros, but obviously this is the base equivalent of their amount that's outstanding. So if I look at my example company here, I can drill down on them from here. Okay, if I wanted to, yeah, or I can do this actually in the overall age debt. So look at overall age debt. This gives me a different look of it, but basically says this is on due date. So what's due? So what's not due? What's 7 days overdue, 14 days overdue? You can also change the brackets to 14 days, 28 days, or 30 days. So I can see that this customer here has got something that's over 7 days overdue, but they've also got a negative, which might be an outstanding credit or receipt that's also older than 28 days. Okay. Okay, so if I kind of move that to document date, you can see the graphs change as well, and also obviously the brackets, they'll change as well. Okay, so here's my example company. If I was debt chasing, okay, what I could do is I could sort on the biggest and oldest debts first and chase those up first. Okay, and by drilling down, yeah, from there I can actually drill down to the customer, and it opens at the credit receivables tab. We've already seen this in a bit more detail, but essentially this is how you can then chase that particular one, come back out of there, and then go and chase up another one. And you can also obviously print this list in whatever sort of format you've decided. Okay. Okay. We've got a predicted cash flow here. Okay, and what this does is, it's not just, oh, this is the due dates. What it does is it calculates an average number of days to pay that each customer takes to pay you. Okay, then it applies that to their outstanding invoices, and then it predicts what amount of money is coming in each day, and then obviously the cumulative total of that. And then if you look here, you can actually see then it brings up the actual transactions that are with each of these predicted dates. So you can so you've got the actual a 31-day cash flow, which is fairly accurate based on customers' payment patterns from history. Statement runs, debtor letter runs. Okay, so a statement run can be as of what date. Do you want to include dispute transactions? Which customers? So pick a few, whatever, and that's it. And then it brings up the print dialog to say, do you want to send them by the lowest cost route? So obviously it'll email the ones it can. If they've got email addresses, it'll fax them. If they've got fax numbers, it'll print them off. Okay.